This graph of the All Ordinaries today makes it pretty clear what happened. After those weak consumer sentiment numbers came out, the index sank below yesterday's close, having got off to a poor start because of another fall on Wall Street. But after the Chinese data came out, the market rallied anemically and stayed rallied for the day. Here's where the index finished up, 0.4% higher. And here are the details of the Chinese data. Economic growth holding at 9.5% and industrial production and retail sales both materially stronger in June than in May. As a result, the Chinese share market has jumped 1.5% despite more falls in debt-mired Europe and debt-mired United States. The latest grim portent out of Europe is a downgrade of Ireland's debt to junk, which does not mean a Chinese boat. Moody's warned that Ireland would need another bailout, which the EU and IMF will presumably get to after they finish bailing out Greece, Portugal, Italy and Spain. The other gloomy news last night was a gloomy set of minutes from the US Federal Reserve. Now, to cut to the chase on that, I have a graph of the number of times the words slow, weak, subdued and decline appear in the Fed minutes. In last night's minutes, this rather unique indicator jumped from 50 to 70. The highest level since August 2009. On the local market today, News Corp continued to fall, down another 3%, but most of the moves were up. BlueScope recovered some of what was lost. Atlas Iron jumped 4.5%. BHP was up a little bit. Transfield jumped 3% after landing a couple of fat North American contracts. The Aussie dollar went back above 106 US cents after the US dollar fell in the wake of the Fed minutes, but it was more or less steady against everything else. And that's finance.